In 2007, Jeff Bezos paid $0 in federal income tax. In 2011, he actually claimed a $4,000 child tax credit. Elon Musk, 0 in 2018. Michael Bloomberg, 0 in multiple years. George Soros, 0 for years at a stretch. These aren't accounting errors. Nobody's going to prison. This is the tax code working exactly as it was designed to work. The strategies behind those $0 tax bills aren't magic, and they aren't reserved for billionaires. They're written into the law. They're legal. And several of them, scaled down, are available to regular people right now. In this video, I'm going to break down the 3 main techniques the wealthy use to legally eliminate their federal income tax. And at the end, I'll show you which parts of this you can actually start using. If you find this useful, hit subscribe. We put out one video like this every week. No fluff, just the stuff your accountant probably won't tell you about. Quick note before we get into it. This is educational information, not personal tax advice. Tax law is complex, and your situation is unique. Always work with a licensed CPA or tax attorney for your specific circumstances. Everything we're about to cover is real, documented, and sourced from public tax filings and IRS code. The first strategy has a name that sounds almost too simple. Buy, borrow, die. The wealthy buy appreciating assets. Stocks, real estate, private companies. These assets go up in value. But here's the critical part. That increased value is not income, not legally, not until you sell. And they never sell. Instead, they borrow against the assets. Banks will happily lend money at low interest rates when you have millions in stock as collateral. That loan? Not income. Loans are not taxable. So they live off the loan money, buying property and funding their lifestyles, all from borrowed money they'll never owe taxes on. And when they die, their heirs inherit the assets at today's market value. The original gain, the profit that was never taxed, gets completely wiped out. This is called the stepped-up basis. Your heirs can then sell the stock immediately and owe 0 in capital gains tax. Buy the asset. Borrow against it to fund your life. Die, passing the stepped-up asset to your heirs. 3 steps, completely legal, used by virtually every ultra-high net worth individual in America. Strategy number 2 came out of the 2017 Tax Cuts and Jobs Act, and it's one of the most aggressive tax deferral tools ever created. Qualified opportunity zones are designated low-income areas across the country. The government created a deal. Reinvest your capital gains into a business or development project inside one of these zones, and the IRS lets you defer and potentially eliminate the tax on those gains. Hold the investment for 10 years, and any new appreciation you earn inside the Opportunity Zone Fund, completely tax-free. Not deferred, not reduced, gone. The tax code was intentionally designed to reward people who put capital to work in the economy. The government wants investment to happen. It's using the tax code to incentivize it. Understanding that principle is the key to understanding everything in this video. The third strategy affects a lot of real estate investors, and it's called depreciation. The IRS assumes that physical assets wear out over time. A rental property is assumed to lose value over 27.5 years. The IRS lets you deduct that theoretical loss from your income every single year, even if the property is actually increasing in value. Let's say you own a rental property worth $500,000. Every year, you can deduct roughly $18,000 as a depreciation expense, reducing your taxable income, even if you collected rent, made a profit, and the property went up in value. Real estate professionals can use these paper losses to offset income from other sources. Done right, it can eliminate your tax liability entirely. Cost segregation studies, bonus depreciation, accelerated schedules. It's a whole field of tax engineering. Okay, so we've covered 3 strategies that billionaires use to pay nothing. That's great, but I'm not a billionaire. What does any of this actually mean for me? Fair question. Let me give you 3 concrete things that regular people can actually do. First, hold your investments. If you're selling stocks every year and paying short-term capital gains taxes, which can be as high as 37%, you're doing the opposite of what the wealthy do. Long-term capital gains are taxed at 0, 15, or 20% depending on your income. If your household income is under roughly $94,000 as a couple, your federal long-term capital gains rate is 0. 0. The same number on Jeff Bezos' tax return. You just have to hold the asset for over a year and earn under the threshold. Second, max your retirement accounts. Traditional 401k and IRA contributions reduce your taxable income dollar for dollar. In 2024, you can shelter up to $23,000 in a 401k. A Roth IRA flips this. You pay tax now, but every dollar of growth and every withdrawal in retirement is completely tax-free. This is putting money somewhere the government can't touch. Third, own something. The single biggest tax advantage in the U.S. tax code is reserved for people who own assets rather than just receiving wages. Business owners, landlords, investors, they have access to deductions, depreciation, and capital gains rates that employees simply don't. This doesn't mean you need to quit your job, but starting a side business or investing in real estate puts you on the same side of the tax code. In 2007, Jeff Bezos paid $0 in federal income tax. That's not a scandal, it's a lesson. The tax code is a document designed to incentivize specific economic behaviors. If you understand which behaviors they're rewarding, holding assets, investing in real estate, putting capital to work, you can position yourself to pay significantly less. Not zero, probably not zero, but significantly less than you're paying now. If you want to go deeper on any of these strategies, I'll link the follow-up videos below. The S-Corp tax trick video is probably the most actionable one if you're self-employed. And if you haven't already, subscribe. We post every Tuesday, and this is genuinely the stuff they don't teach you anywhere else.